we were kind of talking before the show, and we feel like there's kind of like a shift that's happening in Overton window when it comes to the debt and the deficits that they're running right now. I go to any mainstream media like Wall Street Journal, Financial Times, Bloomberg, and I'm just seeing headline after headline after headline that could basically be viewed as marketing material for why to buy Bitcoin.
Exactly.
So what would you say on that? This
I
Overton window
completely agree.
shifting.
I mean, it's just stunning to me. I mean, and the markets are doing it too. I mean, the two sound money assets, the superior one, Bitcoin, and the slightly inferior but still good one, gold, are at or near record highs. And to me, that's all the signal that you need. I mean, that is the Swan signal that, it's becoming more and more people around the world are becoming aware of just how fiscally messed up things are. And as you point out, the mainstream media has picked up on it. A lot of high profile folks have picked up on it. Like the most notable example of it was the Monday article in the Wall Street Journal that just talked about the debt and the debt problem and the fiscal irresponsibility. It's becoming mainstream news, as it should. We've all been watching this unfold for years and have known this problem was coming, but I don't think the rest of the world was as aware of it as we've been.
Well, it's becoming like too big to ignore, I feel like. And the CBO's own projections are calling it unsustainable. They're saying that GDP will get to 166% in 2054. That's assuming there's not going to be any recession. And then they expect the deficits to get to 2.6 trillion in a few years. And so like even the president of the CBO itself, there was an interesting article in the Financial Times warning about the risk of a similar situation unfolding like the gilt markets that happened in 2022, where one of the policy makers there started to do tax cuts or proposed it. And then that just is what did it, where the market just rejected it. You saw interest rates spike. You saw the central bank have to come back and to start doing bond buying activities to bring it back down. You saw the pound get like really hit hard. And this is the president of the CPO warning that we could be set up for something similar. I mean, it's pretty extraordinary.
It's a big deal. I mean, I remember that like it was yesterday, and it was a crack in the system. And these cracks just keep coming one after another. Silicon Valley Bank failing was a crack. Even last fall, when the 10-year went very quickly, went up over 5%, and it immediately brought out 15 Fed speakers who said, no, don't worry, we're going to be cutting soon. The rate hiking cycle is over. I mean, they realize they're walking on a tightrope, and that they can fall off into inflation or deflation, and they're trying to strike a balance. But honestly, my view is they're playing a losing hand, and it's an impossible task. And at the end of the day, they will print. I mean, if have your guy pull up the M2 chart, that we were talking about pre-show. What we can see is that there we go. This is going to continue, right? and this is the entire investment case for sound money. The government cannot stop printing in a system that's debt-based and Keynesian debt-based, and where if they did stop printing, they would have a deflationary collapse. And that's the fundamental underlying thesis of what we're talking about.
Yeah, that's monetary inflation in one chart.
Exactly, debasement.
Yeah, I don't. There was also like an interesting interview with Ken Griffin, billionaire hedge fund manager, and he was asked what's the number one risk that he sees that the market's not talking about, and he said the sovereign risk of U.S. credit. He said the fact that it's not AAA anymore. He said their spending is up 20% in 2 years, and then he said, who is going to buy these bonds? He said will there be a loss of confidence in owning an ever-increasing stockpile of debt? And he thinks that what they will resort to, because there's no IMF, there's nobody's going to bail out America like any other country. He said that we're going to start funding domestic liabilities with domestic money. And if I could decode that, it means money printer go burr.
I think that's right. And it's not just him. It's Mohamed El-Erian came out and said something recently. And as you and I were discussing pre-show, Larry Fink, has been taking his swipe at it. I mean, that all of these people are coming to realize the Overton window has shifted. And I think everybody, including the markets, is becoming more and more aware of this. I mean, Druckenmiller said something along these lines, has said several times along these lines that it's an underlying problem. And, Jay Powell said it, and it actually is kind of stunning to me that here's a guy who's the head of the Federal Reserve who has actually admitted that the system where debt is growing faster than GDP is unsustainable. And of course, if I were a congressperson, the next question I would ask is, okay, and so what do we do next? And that part just never goes, never gets answered. And it's Herb Stein's law, right? If something cannot go on forever, if something cannot continue forever, it will end. I think the piece we're all questioning, we don't understand, is when will it end? Because it feels like it might be a long time, because they've been pretty good at kicking the can for a long time, but it also feels like it's getting a little bit more acute right now.
Yeah, well, you had Jerome Powell, like you said, like what are they supposed to do in this period where I would say fiscal policy is dominant, you could say.
Right.
And
Correct.
if they try to keep interest rates high, that's just going to jack up the interest expense more, which is an inflationary driver, just worsening the problem that they're trying to bring down with those interest rate hikes. And I think that's why you hear this Jay Powell walking this line, right? Last week, he said things that you're just like, what? Because he said, financial conditions are tight, and I'm looking at, and I'm seeing like meme coins ripping. I see the stock market at all-time highs.
Right.
What is he actually looking like? You can't even just. It's like, what's the rationale behind a statement like that when you just look out into the world?
And he also says things like, inflation is running a little bit hot, but we still think it's going to come down, and so we think the cuts are appropriate. And ignore the man behind the curtain here as we change this quantitative tightening, because, and I found this amazing, and in his presser he even alluded to, the 2019 repo blowout. He said, well, it's clear that, the plumbing is a little unclear, and therefore maybe we want to taper this QT so that we don't find ourselves in a situation where we don't have the right amount of money in the right place at the right time. And I just thought, wow, that's interesting for him to admit that. Mm-hmm. I think Lori Logan, who is, kind of his internal financial plumbing person, has warned him that if they continue this QT and the reverse repo gets drawn down to a low enough level, there's going to be a shortage of money in the system. And what you and I think both anticipate is that at some point in time they're going to have to change direction, and printer is going to go burr. But so far they've been able to kind of continue with the pretend that he's Paul Volcker. I don't think he is, but that's what he wants to be. So.
Yeah. It seemed like Powell's like priming the market with that messaging last week, but it's funny because I feel like the market understands these dynamics a little bit, because that's why, like, right when he started to signal it, you saw the stock market rip, gold rip, Bitcoin rip 6K intraday.
Absolutely.
When he did
gold
that.
too, gold and silver, same thing. They all caught a bid just immediately. I mean, and that's why, as we talked about earlier, the gold and Bitcoin are hitting these record levels, and in spite of higher rates. If you could pull up the tips chart, I think this is a very interesting chart. First of all, I want to credit Luke Groman for this chart. This is in his service, which I highly recommend everyone subscribe to. It's just an outstanding service. What this chart shows, it's kind of confusing, but let's just kind of walk through it. The yellow line is the price of gold on the right-hand scale. And as you can see, it kind of bumped up against 1900 in 2011, bumped up against 2000 a couple of times in 2020 and 2022, went back down. And now notice it's broken out. 2100 going above 2100. That's a clear breakout in the gold price. Of course, nobody's really talking about it because everyone's more excited about Bitcoin, as they should be, but it's been ignored. But the blue line is an interesting thing. So let me describe what this is. It's the inverted real rate of interest. And if you notice, pre-2022, these two lines were fairly correlated, which is to say that, as real rates got higher, gold would go, or I'm sorry, as real rates trended lower, gold would go higher, and vice versa. But now Powell has come in and he's raised rates substantially to the point where the Fed funds is 5 and change, and the reported inflation is in the 3s. So that implies that there's a positive 200 basis points of real return in the bonds these days, and the 10-year. And and that's, as you can see on the left-hand scale, it's inverted. But notice the separation. These tightly correlated series broke and separated, and to me, there's a lot of signal there, and the signal is that gold smells it. Even though these rates are high, gold is saying, hey, you know what? We know they're going to have to print again, and therefore give us some gold. And
So
and I
that's what that
obviously, if you did a similar chart with Bitcoin, it would show similar, with a more volatile swings because of Bitcoin, it would show a similar kind of set of outcomes. So.
Yeah, and like it seems like central banks themselves might understand it too, the way that they're hoarding gold lately, right? So let's actually throw up that Tavi chart, Jacob. We can kind of walk through this a little bit. Because like Ken Griffin was asking about who's going to buy our debt, and a lot of people have looked at foreign investors. So the Tavi,
Yeah,
the
I think
gold
you want
foreign
the foreign
investor chart.
central bank chart is the one you're looking for, Jacob. Title is Foreign Central Banks at the top. It's dark.
There you go. There you go. So this chart is very interesting. So credit to Tavi Costa. Like, I think it's a phenomenal chart. It's looking at the amount of treasury issuance bought by foreign holders or foreign investors. And then it also looks at central banks accumulating gold at a record pace. And so what are some of your takeaways from this chart?
Yeah, so there are a couple of interesting things going on here. I mean, the first thing to note is the blue is gold as a percentage of global international reserves. And, and by the way, it doesn't continue back to the 30s, but the scale is on the right-hand side. But as you can see, gold played a very important role, a large role in international reserves, 60 or 70%, and we went off the gold standard in 71, and it continued because the price of gold went up a lot. It actually peaked kind of in 1980 at the peak price of gold. And then, of course, gold got demonetized, and people just didn't care about it. And as a result of that demonetization, you can see it sliding down so much. And really, the key reserve asset became the debt 10-year bond, which was the white line. I don't know if you can bring the chart up again, just so I can refer to it. But and as you can see, the white line, people were holding. Foreigners were buying our debt from the 1980 onward, and and they increasingly held large amounts of debt, and so the U.S. was in the very enviable position of being able to export our inflation, and to the degree we ran deficits, which throughout most of that time we did, the foreigners would buy it. And then something happened in 2014, and Luke Groman actually points this out, and the foreigners stopped buying our debt. They started to disinvest in our bonds, and so it's interesting that trend has accelerated as I think foreigners have become more and more aware of the fact that the U.S. federal government has a fiscal and spending problem in turn, and it's small. It's not as though gold has taken off, but it's interesting to note that since that same 2014 period, the blue lines have gotten larger, and I think and continue to get larger as more and more central banks are buying gold as a reserve asset as opposed to buying treasuries as a reserve asset. And so that, again, indicates the belief that the U.S. fiscal situation is not sustainable.
Yeah, and I bet they're stopping the purchases or reducing the rate that they're purchasing them, because not only maybe are they getting queasy when they look at the rate of spending, but also the weaponization of the dollar, right? And how they're diversifying that risk. I think you brought up Ronnie, and Ronnie shared an interesting report from the World Bank, but it's looking at like which countries are buying gold the most in their reserves. And the report showed that in half of the 10 highest annual increases in gold stockpiles since 1999, the affected country was sanctioned during the previous year or two. And so kind of shows that they increasingly turn to gold to protect themselves against the threat of sanctions or the weaponization of the dollar, which has increased over the last decade or so.
Yeah, I mean, interesting point you bring up. I mean, the U.S. grabbing the $600 billion from Russia, was, in my opinion, a very short-sighted move, because it really sent a message to the world that, the treasury assets, the treasuries that you own can be seized, and therefore, do you really own them? And it has to have been noticed in every single capital all around the world. And people are thinking, okay, if we want to store wealth, do we store it in U.S. treasuries or do we store it in gold? And it's like, you know what? I think I'll take the gold because I know that the treasuries, we've just seen the U.S. seize treasuries, and so that's a big deal. The other thing that's going on is that The dollar used to be very strong and used to be kind of, well, it is still the world's reserve asset, but it used to be 90 some odd % of all transactions in the world were dollar denominated, including all purchases of oil, which is a huge commodity. That's really changed. And that created a bid for the dollar. I mean, every country in the world had to buy dollars in order to then turn around and buy oil if there were oil importers, and China is a big oil importer. And so that's been changing, because what's happening is the Gulf states and other oil exporters, including Russia, are willing to accept the currencies of some of these other countries in exchange instead of the dollar. So, you've got the Gulf states are buying oil or selling oil in yuan from China, and Russia is selling oil to China and accepting yuan. And to the degree that either of those two parties don't have anything they want to buy from China that's yuan denominated, they can quickly swap the yuan into gold. And so, this again is Luke Groman's thesis. I credit him with being kind of the first to uncover this, but he honestly thinks that what's going on with gold is it's becoming a commodity currency. It is becoming it. Gold, in my opinion, what's going on is gold is slowly replacing the US dollar as the neutral reserve asset. And I think that's occurring just logically because of the way that the US has done two things. One, we seized, other people's treasuries, which sent them a very strong message that, we couldn't be trusted in that respect. And two, if you look at Washington, D.C., and, they just passed a $1.2 trillion spending bill in 48 hours. And, that's pretty much par for the course over there. They're kind of out of control. And so, these are logical things, but they don't, it's not as if we're going to go, the dollar's going to lose its reserve status overnight, right? I mean, it's just, it's just at the margin, you can see the trend.